So one of the common questions that come up in client meetings is my account is down since the beginning of November. Should I be doing anything about this? Should I be preparing or doing something, cutting back?
Yeah, exactly. So, we hit a peak early November. It's been not a big drop, but it's been a drop. And so people see that, they get nervous about it. What should I do? Those types of things. So number one is you got to make sure that client or you have the situation in place where you have the right amount of stock versus bond. You're in the right risk realm. So if you look at that and you get nervous about how much it moved down, then maybe you're not in the right spot. So maybe once things settle down here, we kind of settle into more bond and a little bit less stock. So that's one of the first pieces. But generally speaking, these little downturns that we have, these are normal. I mean, it's the 5 to 15% downturns are happening pretty much constantly, and so I'm not too worried about it at that point in time. I look at kind of that overall trend and how things are going, and things are still good. Sometimes it's hard to convince ourselves that we're still in an uptrend when things are falling, even for a couple of weeks. And there's, of course, all the bad news out there just makes us really scared, which is why I do these positive Fridays like I did today, because at least it gives us some balance in the thought process. I think, get your thoughts in a balanced position where you understand the positives to go with the negatives, including the negative of looking at your account and seeing that it fell, right? Just understand that there's, whatever it is that works for you. For me, watching insiders buy right now, I don't know. That's a pretty interesting stat. I mean, that means something to me. It helps me when I watch my accounts fall, and so those types of things that are out there. In terms of cutting back what you're taking out and those types of things, this is too small of a downturn to really make any adjustments at this point in time. Again, talk to me at some point later, and we'll see what happens. But right now, I would be kind of holding the course, and I will make adjustments to the portfolios as I see things that need to be done in terms of what's going on. But right now, things seem to be okay as far as I'm concerned. I see enough positives to kind of at least balance out some of the negatives. I do think it's going to go down more from here. I just do. Just it gets a little momentum one way or another. This is what I call a counter cyclical trend. So the major trend, is up, but the counter cyclical trend right now is down. That could change, but I'd be really surprised. I mean, rates are still at zero. We still have stimulus coming in from the Federal Reserve. There's just so many positives. I think people are going to come in here and start snapping these things up, especially once they move that debt ceiling up. That is one issue that will continue to hold the market at from flying upward. Is that all right? That worries the major managers of money who manage risk first, return second, are got to be looking at that debt ceiling, thinking, okay, we need to see that thing move up and out, as before we're really going to start running back into the area. And then again, I think earnings coming would help, right? Because the earnings were so fantastic in the third quarter. I think so far everything we've seen says to me that things could be quite decent overall. Individual companies can have trouble, right? There's no doubt. But the overall market, which is basically what we invest in for the most part, is the overall market through these exchange traded funds, could do quite well. So anyway, that would be my outlook.